Hey guys, welcome back to another video by Fully Informed Trade, or FI Trade for short, knowledge for everyone. My name is Alex Cho, and right now I'm going to be talking about the S&P 500. And right now the S&P 500 is kind of piercing this trend line. And again, it was able to close above that trend line, but that doesn't really mean much to me. I think that even if the S&P 500 were to sustain above it, it probably will for a couple more trading sessions. But again, if the dollar does have a pretty strong recovery, which I think it will based on the negative trajectory the Euro-US dollar is going in, it's highly likely that the S&P 500 will pull back. So I'm going to give it a couple more days. I do have some long positions set up, but I also think that these long positions may have to be closed out in a couple more days, depending. But again, this market is really volatile right now, and anybody who's willing to buy above this trend line would be kind of crazy to do it. I think it's better to just sit back, and if you're a longer term investor, probably none of this stuff really matters to you. But for shorter term traders who rely on profit and losses, this is definitely not one of those. This is one of those moments where you're statistically at a disadvantage if you do decide to buy. So that's why I'm just going to sit back and wait for a couple days, see how the S&P 500 performs, and see if it actually sustains above this trend line or if it's just a hammer formation ready to pull back again. So we'll see if this pattern repeats itself, or if some negative economic data comes out or something like that. So we'll just sit back and watch what the S&P 500 does. But it really pays right now to be cautious with your investments and to look for specific opportunities for specific stocks rather than trying to gamble on the actual index itself. So take care, folks. I hope you guys have a wonderful trading session, and I hope you guys make money every single day of the year. So take care.